go. Hello, this is Dave, and welcome to Equity Story. This is just general share advice and not personal advice. And let's start with Wolf. Welcome, Wolfie. How's your weekend?
It was good.
I've just stressed poor Wolfie out. I've just been giving him some. He's had some poor old stressful Dave time, but he's okay now.
Not
Wolf.
really, but I'm still stressed. But anyway, let's keep going with it.
Because the problem is he works with like the dumbest in the class, and to make things, explain things to Dave, he gets a bit frustrated, but that's okay. So did my teachers, Wolf, but they just used to at boarding school cane me and put me in the corner and stick the hat on my head. With the big D. I thought it meant Dave, and so I thought they're being nice, but then I realized it didn't mean Dave by the time I left boarding school.
I'm not going to comment. I'm not going to comment on that at all. I am just going to talk about fundamentals today because.
All right. Okay. Listen.
We talked about
Jackson Hole. The hole happened, right? The market's down. Oh, 3%. Obviously, our market. What normally happens, Wolf, but this can continue for another day. So I'm expecting the Dow to be down again tonight.
Mm-hmm.
So beginning of the week is going to be tough. Maybe, if you're going to nibble away, maybe it's better towards the end of the week. But like we said, one good thing, one really, really positive thing was the Fed just being honest at last, coming out and saying, yeah, we've got a problem and we're going to fix it. And if we have to drive these interest rates higher, we're going to have to do it. To do that, obviously, I think over time, over the next 2 months, I think there's a good chance that the Dow will re-rate companies on different forward P ratios, and we'll get a pullback on the markets to something which is more normal. We are in a bear market, and we just got to have to live with it. But I thought it was healthy, Wolf. I thought it was really good that the Fed came out and they said we've got a problem and we're going to fix it. That made me think possibly, there's an argument that maybe come Tuesday, Wednesday, everyone's going to go, hold on a second. At least, the market doesn't like uncertainty, does it? They love to see a strong Fed being honest and to the point, and maybe that might just help.
Yeah, look, our market loves clarity, so at least you've got a period there where that the Fed is going to be focusing on taming inflation. It's going to be probably a short-term pain for long-term gain. I'm happy with that. At least I know where I stand. And yeah, I'm still
the market. Yeah, the market. We know the markets around the world have got major issues at the moment. I said on Einstein's, if it looks like a duck, walks like a duck, quacks like a duck, it's a duck, right? And I think obviously that we know they've got those issues at the moment. So anyway, let's go. We've got some good stories that came out today. Let's have a look at them more to see if there's any buys here. A2 milk, which I know you don't like because you like your goat milk. This is I think normal baby milk.
It is normal milk.
Yeah, you should try this one. I know you love your goat milk in your bottle, but try the A2 milk, Wolf. Anyway, it's bounced above trend. It's I think too early. It's got a bit of a gap on the daily, so maybe I'll be waiting off, but a little bit too early for me to buy. I wouldn't buy off the daily. And I'd wait till Friday, see what it looks like, Wolf. Would you start? Is A2M back? Is it back, baby?
It seems to be. The financials today saw a lot of green shoots in there. I think the market's applauding that. And if you look at the outlook, it looks positive for the thing, for the company. So for me, overall, I can see there's a possibility the start of a longer term type love for the story returning again. There's still issues in there. You've still got China, which is still, for me, a big risk and an unknown with the way they just operate. Then you've got the 30 times still P attached to the story after today's results. However, if they can improve over the next, say, 12 months, that P could easily come back very quickly, right, to some really attractive level. So for me, there's finally for me a moment today that I'm thinking I'm happy to look at this now as a possible either trade for you or for the traders out there, or for me as a fundamental, just having a look at it, maybe probably I'm going to give it another probably 6 months, but at least it's on my radar.
All right, very good, Wolf. And I think if this looks good on Friday, we can talk about it when we do live, and maybe maybe we can start having a look at it. Wolf, NXT. Unfortunately, obviously bad move today. How's the company doing though? How's it traveling?
Bring up the results. Come on, bring up the results. Let's have a look at what they've come up with, so we can see exactly what they're doing. So
we had a look at them trading at 15 times.
That's the revenue ratio, right? So on the revenue 15 times, which is I think expensive in this market, right? When you look at it as a tech stock, you've got underlying EBITDA going decently okay. We've got a small little profit after tax. All in all, it seems okay, but problem is you've got a big major turnaround in valuations going on in the tech space. I don't think anyone's prepared to pay 15 times for companies these days, unless you are growing at 100% or something like that. They do give a guidance here, 340 to 355 million growth. So that's what puts it on about 10% growth, right? Somewhere there, which is okay. But, is that enough for you on 15 times? Probably not. So with this re-rate going on, Dave, with a complete different view, lots of risk coming off, where the re-rate's going to go, I've got no idea. What the market's prepared to pay for companies like NXT, I've got no idea, because we are going through a significant change. So because fundamentally the company's going okay, but the outside fundamentals are changing, factors are changing. I think, say for myself, 12 months ago, probably I'd say, it's been in my top 50 stocks, right, that I'd probably be still holding long term. But because the market's completely changing around, and you've got a period that are now throwing up a real cheap stories out there, right, and pretty attractive growth stories out there, that's probably gone from, maybe top 30 to 50 to maybe outside the top 50. So I'm thinking you could be sitting there for 12, 24 months, even longer, going sideways, maybe the valuation catching up to its growth, while you can possibly be making money somewhere else with this sort of
and obviously no dividend either. So
exactly. I mean, that is the problem, right? There is just a little incentives for me to be seeing in this story right now.
Okay, so it's a sell. Wolf, ICT.
Yep.
Good looking chart. Hasn't gone on with it, but how was the announcement?
Yeah, okay. Look, okay. It's interesting. The chart looks pretty good. Were the results good enough for the chart? I'm not so sure, right? It's still there's so many education stocks out there, Dave, that it's just very, very difficult to get excited about everything. However, it's a decent story. It's a decent story. And like I said, I've gone through so many education stocks this week, or last week, sorry, and the week previously, that you can just go, where do you go from these sort of things? But it's not bad.
Look how happy they are learning.
Yeah, absolutely. I love those picks that they use on their presentation, don't you?
Look, I was never like this when I was learning.
Yeah, they're probably talking about let's have a coffee. Nothing to do about it.
No, I think they're talking about something else, those two, but that's why they're happy. But anyway, c'est la vie. But interesting story, Wolf. Good chart and certainly possibly tradable. VRS.
Yep.
Again,
I want to talk about another story that's been really, probably been languishing for a long, long time. VRS, which is in the spatial data space, and looks like there's a big turnaround going on. So, the revenues grew about 20% odd, so it's almost 100 million. The market cap is ridiculously low at about 30 million, right? You've got now profitability, so there's a big turnaround in this. So 92.4 million, up 20%. You've got after taking profit of 0.5, so they are really turned this business around and looking to grow further, right? And it is a decent business. They've got some big clients, BHPs of the world, and so on, right? This looks cheap. and if possibly do another year of turning the business around, this is not going to stay for 30 million odd market cap forever, Dave. So I'm looking this very closely as a possible, definitely a trade to start off with, and maybe turn it into more of a little bit of a longer term trade.
Just have a look. They've got 17.2 million net cash.
Yeah, and so they also had a pretty bad balance sheet. There's just was no growth. Look at that. Last 2 years completely. So change the business around, right? Profitable, growing. That's the sort of businesses that probably have got a lot of scope to move up from here.
A secured workload in excess of 55 million as well.
Yep. An unsecured project pipe of 190 million. So possibly more growth ahead in FY23, Dave. I mean, I'm glad that they're putting their nuts on the line. Go, we're going to come up with this ridiculous growth. Let's see what they say. So you can see, FY20 was 7.48. Look at the EBIT. Look at the underlying EBIT, and look at the last 2 years. It's been a significant turnaround. Significant turnaround. You got to be probably thinking this management is doing a good job.
It looks excellent, Wolf. So you know what? And it's so under the radar, isn't it?
I think it's also lightly traded, but
it is lightly traded. So really, the charts get less important with it because I mean it's going to go up and down. I'll try and have a look at it on the monthly. It hasn't. Still, it's a really interesting story actually.
Yeah, they're interesting. Companies usually are pretty positive about. Doesn't matter what they say, right, in their presentations or results, and they all go, we have got so much work order. We're going to keep going for 100 years, right? That's the typical type stuff, and no exception here. They are talking pretty positively, but to me, you don't have to have too much positivity growth next year for it to further improve, right? Significantly, at least on the bottom line, become even more profitable, because they only just hit profitability this year. So the margins are still tiny. So all it needs a little more of a tweak, further cost cuts somewhere, and this is going to be very cheap.
Okay, so I think we're
one to watch,
or if you want to take maybe a longer term view, nibble away around here, Wolf.
Yeah,
I think we'll do that. I think this can go on as a long term. I'll put on a monthly chart. It can go on as a long term nibble and maybe a stop loss under.
Long term nibble, is it?
Have we ever had a long term nibble before? Is this our first ever? Can you hear me? Can you hear me? Wolf? Hello, hello, hello? Hello? I think, Hi, Wolf, am I back?
Yes, you're back. You're back.
Sorry about that.
It was your fault, wasn't it?
So is this the world's first ever long-term nibble? Maybe. I don't know. Listen.
Very good. I got to say, cautious nibble. I certainly would not be rushing into this. Like I said, there's definitely, you've seen the numbers. There's a turnaround going on, but is it the best company in the world? No. So I would not be putting my mortgage on this.
Maybe we use a more sort of word like high risk.
Yeah,
a little bit
high
more.
risk nibble, long term.
Okay, let's have a look at OCL, Wolf. We know it's one of the best tech stocks around.
Yep.
It looks like, well, it's just holding above trend. Are you taking no prisoners with these tech stocks now? If this goes below trend,
I'm gonna give you the same example that I've used with NXT, right? It's so expensive, 74 times, that it could possibly trend sidewards to down for a very long time until market's comfortable paying whatever numbers they're prepared to pay for, right? I don't think it's 74, probably maybe in the less than 50, maybe. I don't know. I mean, we're going to sit here and you can speculate, but this is what I'm saying. Yeah, long term is still a great story. The problem is, if the market are going to be selling these things down more, and it is still in a downtrend, unfortunately, what are you prepared to pay for this? Because, why would you have a portfolio sitting there doing nothing for 12 months when you can look at cheaper stories, when you can improve your returns with a 12 months somewhere else, for example, right? And maybe pick this up at 12 times in 12 months. That's the thing why I need to change the way we will look at some of these tech stocks, or even some of the expensive stories. We need to go, okay, yes, they are longer term maybe, but there might be just dead in the water for an extended period of time. So we got to just make the case of maybe finding somewhere else to play with, and not having a portfolio doing nothing.
Right.
If that makes
Wolf.
sense.
Yeah, perfect, Wolf. And JLG, Wolfie, sort of, again, coming back down to trend.
Yep.
If you're in this, what's your view? Obviously, technically, it just looks sideways at the moment.
Yeah, well, great result today. I have to give them that, right? I'm digging what they're coming up with. I'm digging their actual outlook as well. But this is, again, post the results, trading at 55 times, not cheap. What is the market prepared to pay for a story like JLG, right? Profitable. You've got all the things going for it. Is it 50 times? Is it 40 times? Is it 30? I've got no idea at this stage. It's still, look how volatile it is. I've got no idea. However, I probably want to own this story. And, we've taken some profits. We've maybe short-term traded this as well many times. So the question is, do you have a nibble now, long-term? Do you wait for $6 for long-term and have a nibble then? That's the sort of questions.
Well,
it's going to be interesting.
Well, I think you've answered your question, Wolf. It's not short-term. So if it comes back to maybe that long-term support around $6, that's the nibble time, right?
Yep. All they need to do, right, is come up with another pearl of a result in FY23, right? Hopefully they will. They obviously set up, it's going to be pretty good, but is it going to be strong enough to bring that, so 50 times, 55 times to say 30 times? Probably not, but at least maybe in the 40s then. It's going to start looking more attractive. But, in the meantime, it could just go sideways for a little while. So, yeah, look, it's more attractive than some of the other businesses out there, because 55 times is not as like 100 or 150 like we've seen some of the other stories. So maybe it's a little bit more attractive. We'll see.
All right. CQR, obviously a decent dividend story. The announcement, good enough for you to be happy holding this, Wolf?
If you're looking for dividends, then I'd say hold on to it. I mean, it's still trending. It's in a range, right? So, dividend of 6%, I think it's okay.
And it's P of 4, which is pretty good. FEX, iron ore play, Wolf, had a little bit of a move earlier, obviously paying a good dividend. How much dividend are they paying now?
Well, I think I worked it at about 12.5% on today's numbers. So another good strong year, right? But remember, iron ore always going backwards. So this is the last 12 months look, and last 12 months, the iron ore was up, and then it was coming down and coming down and coming down. So it's probably a little bit skewed, and I don't think FX will have as good as year as it did last year. So maybe their dividend is under threat. I think this is under threat significantly. Right,
and well, I don't think that dividend. They normally pay them at Christmas. June.
Good question. I'm not sure what they pay, but
you wouldn't be holding on to the dividend if they're going to be paying it at Christmas like they normally do. in this environment, would you?
You could possibly see that dividend completely get destroyed by the share price performance, right?
No, that's what I'm saying. A bit risky, that one.
Yeah.
FMG. Inflation.
Actually, bring up the results. I just want to give you an interesting look through, because this is almost like the case in point of what's going on in the mining space, right? Pretty much FMG, you can see, if you just go down to the results, and you can see what's going on. Keep going down. Even though they are around a better than expected result and better than expected dividend, it's much lower than the previous period, right? So you can see, keep going down. They've got a couple of tables on there that we can see. You can see for yourself what is actually going on. So right there, stop right there. So you've got roughly, mining wise, it's pretty similar numbers, right? But you can see the average revenue. US dollars, 100 versus 135. That's a 26% drop right there. C1 costs, 14 versus 16. That's not good either. So those two things are going against it. And this is the whole industry wide, what's going on, right? So you've got as a result, of course, you've got much lower revenues, much lower NPAT, and much lower dividends. But, it's still better than results are. But there's a trend here. Possibly you're going to see that going down further. Now, the actual outlook, Dave, they talked about now the C1 costs going from $15.91 to about $19 odd. That's creeping up, going up. And if the iron ore price keeps going down, or at least languish, you're probably going to see even lower dividends. So I'm thinking maybe even half from here, even though the dividend yield as of today is 10%, and you think, yeah, this is great. If the iron ore share price is weak, you've got costs going up, there is not much growth from the actual production wise, that dividend is going to get slashed significantly next year.
Right. So, okay. So to sort of look at Fortescue as a safe dividend play, really, not really.
Yeah, look, yeah, really not really. It's exactly how I should say it, right? If you're prepared to take, I don't know, 6% yield, maybe 5, 6, 7% yield, because you're obviously not going to get 10, right? And I'd say the share price is probably going to go down with it.
All right, thanks, Wolfie.
Mhm.
Lovisa.
Yes.
So it's a good chart. It's had a move. I mean, technically, I think we sort of, we missed it. I think I did have it on Einstein's there, but I don't think I'll be trading it at the moment. I haven't seen fantastic candles the last few weeks, but fundamentally, were you liking the story?
No. You know how much I love this story, Dave. Lovisa. Look, it seems like a great rollout story, right? Opening stores pretty much across the globe. And that's what is driving his growth, really. So good luck to it. Not my cup of tea. Trading on, let me see, 34 times for a retailer. Pass.
A bit expensive.
Mm.
M70 Wolf.
Mm-hmm.
So that's a quite broken through trend.
Mm-hmm.
Now, maybe it could have done today if the market wasn't down so sort of heavily.
Yep.
Because the announcement was pretty good, wasn't it?
Yeah. So this is actually, we were talking about, okay, finding cheaper tech stocks instead of paying 15 or whatever times finding cheaper. Well, there's a cheap stock. It's high risk, of course, but there's a cheap story to have a look at. M70, and a good story as well. It's a very interesting story, and you've got nice growth, 30% year on year. Sales orders, we've got revenue up 42%. With cash receipts, that's what I'm looking at. The cash receipts up 34%, and on those numbers, Dave, they're actually trading on about 5 times revenues, right? And also look at that EBITDA positive. That's a big box tick. So saying all the right things, Dave, in this record result. We know there's probably going to be a little bit fluctuating because it's a business that it's like a PME where it's contract type and so on. So it might be lumpy in the first few years. But generally speaking, it's definitely growing, and it's now at these prices looks very attractive.
And like you said, plenty of cash as well.
Yes, exactly.
It looks very, very good. So, fundamentally tick. We just want to see better price action on the charts before we get into
that's
it.
right. Mm-hmm.
Now, let's have a look at MMS because it's up 8% today, Wolf.
It's racing after we spoke this morning.
Tell us why.
Okay, the numbers were very, very good. And I got another turnaround story, Dave. Another turnaround story that had its issues getting out of the UK, which is good because it seems to be like a graveyard for Australian companies, quite a lot. And, the problem with the UK, Dave, unless you've got something extraordinary to give, something new, UK is a very competitive market. They've got many more businesses than Australia. So it's difficult to make a success of it when you go down there. And MMS is nothing incredible.
Yeah, but it's not just the UK. You see a lot of Australian companies moving abroad. You've got to be You got to have an exceptional product.
Yeah, absolutely, 100%. Otherwise, forget it. There's no point, right? You got to have something differentiating, or like you said, exceptional, or maybe killing the old ways of doing stuff, right? So MMS doesn't have that. That's why they shouldn't be going to the UK. Anyway, they're getting out. They're still looking to sell further its UK operations, so possibly more divestments this year. That's a good thing. But I like the numbers today. They were actually quite good. And you know what? It's cheap, 12 times, 8.5% dividend yield, Dave. For a yield hunter out there, this looks good.
And what 8%, even with the uptick today, up 8%, still around 8%.
Yeah. So I did it this morning, and they were up maybe 4%, 3% this morning. But let me just have a look at my numbers. Hang on. 8.4. So let's say 8% at the moment, dividend yield. Excellent.
And is that fully franked?
Very good question. Let me see. It is saying on franking. Dividend yield. Hang on, let me check. Let me click on that. God, you ask questions. I have to open a lot of screens up. So thanks for that.
No, that's all right.
Find that out. Let me just double check that. Yes, 100% franked. Thank you.
All right. Thanks, Wolfie.
I got it.
Obviously, we won't talk about ANG, but it's that space. It's trending that space.
Oh, no, actually, let's Dave, open it up. Because it's a good looking chart. Let's see why it's a good looking chart, and maybe we can just give more of that idea why some of these have been quite attractive, especially from the dividend point of view, right? And cheap. But in this case, there's not much of a dividend here. So maybe that's why I would not be chasing this, because the dividend yield is at 1.4%. That's not enough for me in this space. But look, the growth is actually quite good, right? So you've got NPAT of 20.6 above guidance of 18. So they're hitting all the right notes, right, with them. And earnings per share up 3.55%. 3.55 cents per share. So that's 524%. That's a decent, obviously, move up. But it's okay, but the dividend is not there. So probably better stories out there, I'd say, unless they can come up with another incredible year of growth dividend.
Well, they're talking next year of FY23 impact to be up 17%.
Yep,
that's quite a bullish statement, actually.
It is. 17% is okay. But it's not ball tearing, is it? I mean, 17%, you can probably find a lot of these sort of engineering companies probably come up with similar type stuff.
Oh yeah, definitely. Wolf, Promedicus.
Yep.
I think, like we said, just a bit of resistance at 55 and coming off. NTO looking weaker and weaker, and a little
bit disappointing on that announcement today, Dave. They actually didn't quite hit the numbers that they were talking about. So that's definitely for me, if you're in this, you'd be out. You probably should have been on that red candle anyway about 5 weeks ago. So yeah, that trade was pretty quick, wasn't it? Up to the 166, and then it was pretty much all over very quickly.
Definitely. Just having a look at some ideas on Monday, obviously on Friday, obviously BRI. We just needed to go down a little bit lower, but hopefully if we get a few more rocky days, we can get that on the buy price. I think it's a question of matter of being just patient. I think SHJ, again, just opportunity knocks a little bit. It's down today. PPE holding up very well and maybe giving it also an opportunity. And actually PWR, again, holding up reasonably well. Wolf, just to end, DGL,
yes,
it's a hot stock. The reason being, obviously, it's had a good chart, and there's not many stocks with a really good chart at the moment.
What an opportunity, Dave, today. Thank sometimes you go, thank God for a bad day. I can buy a hot stock much cheaper. And I like your choice, because they've, last 5 announcements. So one was an upgrade to earnings, big positive.
And not in April, 19, yeah.
Yeah, so 3 acquisitions, I think, in there. It looks pretty cheap on a PE, I think, of just looking at Reuters 14 times. I'm hoping for a good result, right? So fingers crossed. They're reporting tomorrow. So if you are going to play this risk event, Dave, as a hot stock, there's the opportunity today.
All right, brilliant. On that note, Wolfie, thank you very much. Absolutely brilliant as normal, and hasta mañana, champion.
Thank you, guys.
Bye.